Hello, everyone. Welcome to another lovely episode with JayForexHouse. I'm your host for today, JayFx, and on today's episode, we're looking into the episode 9 of our Malaysian style support and resistance. For those of you who are new to the channel, on this channel, we break down different technical methods and psychological tips to understand trading, and I'm looking at it from a technical perspective. So you could check out other episodes and other methods that you could actually learn from that could help you understand and read the charts better. So on today's episode, we're looking at line charts and trend line. And before we dive into our major topic for today, as you can see on my screen, displayed is multiple um, line charts, let me call it that, line confluence that are being used with support and resistance. So what I would help you understand today is the basic of how I do this, how I got to this point, and the confluence that I use to make this more logical. If you see this on the candlestick chart, it looks quite different from what you're seeing on the line chart. And on that point, it would actually make a lot of sense, and you would see your areas where you would actually get entries from. But this is a confluence that takes a lot of different aspect of trading to be put together in as much as it's just lines on charts. So before we look into that, let's look into what line charts are and also what candlesticks are. And then we do a roundup because this is episode 9 of the Malaysian SNR. I can't really give you everything in one episode. So I'm trying to make them as short as possible. So you would have to check out other episodes where we talked about different confluence of how this method actually works. So today's episode, everything I'll be giving you is basically how you use line charts and trend line on the charts. Now, what's a candlesticks? Candlesticks are data presentation that help you to understand price opening. They help you understand the opening of price, the high of price, the low of price, and the close. So this is something you see very frequent when it comes to price action, especially ICT, open, high, close. And this is something that helps us to understand basically the transactions that happen, where you see this being the body of the reaction from the open to the close. And then we have the wick, which is the areas price went to before, actually ending up closing. So we have the open, we have the close, we have the high, and we have the low. And this is the information basically candlestick helps us to understand. So each candlestick is actually a high, a close, an open, and a body. So it forms the candlestick. You see the high, which is the wick, the low, the open, and the close. So for the bullish and the bearish candle, the open and the close is different. For the bearish, this is the open. This would be the close. For the bullish, this would be the open, and then this would be the close. This would be the low, and then this tiny wick above would be the high. So that's the information we get from candlestick, and these are what candlestick presentation are. But this is quite different from what we have as line charts. And line charts are the other hand of statistical instruments that helps us to understand the information only related to the close and open of price, per section, or let's say per time frame. So when you look at line charts, quite different from candlestick, they actually just identify the low, which is the close, and the open of price action. So you can't actually see the high and the lows and the other wicks, the aspects that candlestick brings to the table. So it's a statistical method that help you see this information over time. And these are actually instrumental statistics that are used on the financial market. So they're called financial instruments. So they help us to understand areas within price action for the price opening, the actual price, and the fluctuate on the ask and bid. So these are the instruments we use to understand the price movement. We just explained what candlesticks are. We just explained what line charts are. Now, what are trend lines? Trend line, as you can hear, the name goes, is something that sounds very similar to line charts, right? But trend line, as we discussed in episode 8, where I taught you guys about the basic information of trend line, is actually an angled support and resistance. And these angled support and resistance are marked out with highs and lows rather than just the consolidation. So on a regular trend line, you would have price moving from a high to a low, within a certain range, or then certainly we have a breakout, and then all of a sudden price is moving at a particular direction. But the trend line is actually that high and low that is formed in the direction of the trend as price breaks out of the consolidation. So it's still support and resistance, but it's basically support and resistance on the trend. So it helps you understand the direction of price and helps you understand the swing points. And that is actually the basic information of what trend line are. So you have to understand these basic points because technically most method are actually the same thing, and they come from the basic foundation of what these principles are. And once you understand what these principles are, you're able to apply them on real charts and see how they work. But when you try to only look at the models and the Confluence where you combine all of them together, you end up missing how they actually work. So that's why I like to give information from a basic perspective and make it as simple as possible. So now we just understood the basic term of line charts, trend line, and candlesticks. I'm going to give you guys a roundup insight of what the Malaysian support and resistance are, like I taught you guys in much previous episode. And then once we have those revisions together, that is, we have every basic understanding of what the Confluence are, we combine them into a model, and then I'll show you guys some few patterns that you can help in identifying these points. So what is the Malaysian style support and resistance? So the Malaysian traders completely ignore the traditional way of trading support and resistance, which is where you have the highs and the low, like we discussed earlier. So these guys came up with a new model or a particular perspective of of picking highs and lows based on open and close, rather than just a regular high rejecting from a low or rejecting from a high. So they rather pick the open and close formation of these candlesticks as support and resistance zone with the confluence of line charts. For resistance, instead of a consolidation and picking the low at that point, they would rather instead look across the line chart, draw a line from a bullish candle to a bearish candle, and then extend it forward, identifying, let's say, what we call in supply and demand, a drop-based drop. So they will rather identify something like this: drop, base, drop, or a drop-based rally. So it looks more like this. So I'm not really good in picking these terms. So sometimes I mix them up. So about that. So we have this as a rally base rally, and then this as a drop base drop. So they pick the candle formations from these points, having it as a drop, which would be the bearish candle, the close, and then the rally, the open of the bullish candle. So they pick that formation, and then the rejection or the reaction it has from the candle, which is within the trend it's coming from, gives them their confidence of if they'll buy or sell from this point. So instead of using this traditional or regular method, which everybody knows as resistance and then support, they call these key levels, which are identified within supply and demand areas, as resistance or support zone. So what we have here is that this is called a resistance. Now, what we look for is what could be resisting this zone from these points. Okay, now we have seen the bend. Let's say price had not gotten to the third candle yet, and we're still at this point. Okay, so what will be the confluence that this could get rejected? That's why you look at the previous price actions. Now, what do we see here? A rally, a base, and a rally. What did I tell you about that? This is how you identify the, from the body, the close, and then the open. But we had a manipulation here. But if you use the line chart, you see, you don't see that, or you just see it's a sharp V. So this is a clear resistance, right? No, it was a support here, then it got broken here. Okay, so there's a resistance now, but it was previously support. Now, if you go back to the candlestick, what do we see? With the confluence of line charts, you can place it like this. Okay, so this was supposed to be the regular formation. And we'd also have this point as well. This is being very, very realistic. Is it that price is going to be reacting from this point or this point? And this was just how it played out. Okay, so this is just showing you how these areas are called support and resistance. And then there's also a reaction from this point as well. And we will get into this a little later as I continue to give you guys a basic breakdown, like the objectives of looking for a trend line. I just want to make sure that you guys have seen some examples of this zone that we called support and resistance. We have another one here. As you can see, the open close of the candle, you can see the bend. Okay, the confluence, which is the rejection. If you look at the line chart, you can see that the previous support was broken. Okay, so this was broken, and then price came back up to test this resistance before testing this point, and then head back up to clear this high. So this is just price action reacting, and this is how support and resistance to them is identified, rather than just looking at a general perspective of a resistance from a previous price action in a very long consolidation, like just drawing a long chart on your screen, and then saying this is a resistance, this is a support, like how we have here. And these rally-based rally concepts are principles that are gotten from supply and demand. So if you want to learn more about that, you can check the other episodes and there are videos on supply and demand also on the YouTube that talks about those particular topic in particular. All right, so let's look into the objectives of combining support and resistance with trend line. I just showed you guys some examples of common or average support and resistance. But when we're looking for a trade, we're looking for a high probability support and resistance level. So what do we do in terms of Confluence? The objectives to look for when you're trying to combine trend line with Malaysian style support and resistance. Now, the support and resistance naturally comes with rejections or breakouts. A rejection would be price bouncing off a support or resistance zone to engulf the at least previous 2 or 3 candles. Okay, as you can see from this point here, the confluence of which this was identified will be explained a little bit later. But the term, what we call a rejection, is either this zone rejecting, which is this engulfing candle you see here, this is a rejection, or this breaking out, which is what we have here, which is a breakout, or what we have here. This is called a breakout. So this was supposed to reject. This would be a rejection here. As you can see, engulfed this candle. But at the end of the day, what the price do? Price created a downtrend and made a breakout. So a breakout is, in terms of smart money, let's look at it like a break of structure. Okay, so the structure broke instead of rejecting or reacting. Let's put it that way to make things very, very simple. I don't like making things complex or making things a little bit harder to understand. So let's just use the term break of structure. Okay. Now, since that is understood, let's look at the objectives of combining trend line and Malaysian style SNR. First of all, you want to identify the Malaysian level. Let's call it that. The Malaysian style SNR. You want to identify that. Because if I say you want to identify the resistance or the support, you might be thinking of the other one. So you want to identify these supply and demand style areas. Now, what confluence do you look for? First of all, you pay attention to the trend, like I mentioned earlier. Now we have understood this part, okay, which is the candle close, the engulfing, which is, as you can see here, this bearish candle engulfed this bullish one. This is an engulfing candle. And then price broke this low, which is a breakout. Okay, so this we would mark as a major resistance level. Now, after you have identified your support or your resistance zone, in this case, we have a resistance and we have the breakout here. Okay, so this would be a resistance zone. The second confluence, which is the second objective, would be to find the trend line that connects you to your next resistance level. Okay, and that's what we have here. So the trend line doesn't have any basic rule. Remember, it's just the resistance or the support in the direction of the trend. So we have a high, a low, a new high, which is a lower high, and then we have a lower low here. So this is a breakout. Now, the trend line has been identified. Okay, we have this. And now you don't want to draw the trend line on the wick, you want to draw it on the body. This is also one of the principles that we use in trading Malaysian style support and resistance. The trend line comes from the body, not the wick. And that's another objective you have to look out for. So now you want to look for the third point on the trend line, which is called the confirmation point. So we have the first point, which is the first resistance zone. Then we find the second point, which is the trend line, which is the resistance or the support in the direction of the trend. And then thirdly, we want to look for the area of interest, which is the third touch. Okay. Now, in this case, the third touch did not happen to reach this point, but this was the confluence. And then if you're looking at this, this was the breakout line I drew. So this would be the resistance line. This would be the resistance line. So this would be the third touch, where we expect the third touch. And this can be seen as liquidity if you want to look at it from smart money perspective too. So nothing is lost here. This could still be seen as a pending area of interest. But let's use a different scenario here. But first of all, I want you guys to understand that we just listed out the objectives of looking for a trend line on Malaysian style support and resistance. Number one, you want to look for the resistance. You could use the pattern of the rally-based rally, the drop-based drop, drop-based rally, and rally-based drop. You could use the confluence of that to identify the support or resistance. And then secondly, you want to look for the line or the connection with another support or another resistance level, which is after a breakout. The breakout is necessary because the second point is technically your connection that makes the third, which is the confirmation, work. So if the second is incorrect, which is without a breakout, you're going to get stopped out on the third one, and then you might blame it on the entry instead. So let's look at the third touch. On this case here, we'd also have, as you can see here, there was a rally, a base, not too visible, then there was another rally. All right, so on the line chart, that might be a little bit blur, but there'll be a sharp bend there. All right, now we look at candlestick again. You can see this touch here, then a quick rejection. The most important point is that the day's breakout, as you can see, the momentum broke this high, so there was a breakout. Now, the confluence of these points and the confluence of these points just makes this an even higher area of interest, because when more trend line connects, instead of it being confusing, it just becomes more confluence, because it just means that multiple support and resistance level are aligning with each other, and that's a confluence. It's a good thing, and this is the reason why you see trend line traders having a lot of trend line on their charts, and it's not understandable or readable to most of you who don't understand. But the more trend line that can connect with each other from a particular area of interest, the more reliable it becomes. So now let's look at the rules for applying a trend line on support and resistance strategy. Number one, the trend line has to be connecting multiple support and resistance level to confirm from the body on the line chart. So it has to be connecting from one support to another one, or from one resistance to another. That is with the body, not with the wick. Number two is that it is essential to use the line chart for confirmation. So when you're looking at the A and B formation, you have to see those formations too on the line chart. Like, it's easy to break down any chart formation on line chart when you're looking at the trend line, because it just shows you just the body without the wick. So you have to confirm the trend line on the line chart. Now, number three is that to ensure that you connect from at least two SNR level in the direction of the trend following the storyline. Remember, I told you guys that there are multiple confluence to why a support and resistance zone works. We have a storyline, and the storyline is coming from the perspective of multiple time frame. That was not added on this particular series, so you don't expect this to be a top-down analysis or an accurate analysis, because I'm not actually using a storyline to explain what's going on. So you have to be coming from a storyline, which is the trend and the counter structure. So it forms a storyline that is being displayed using trend line. Now, number four would be that to make sure that the third point is a confirmation point and the second point had a breakout, not a rejection. Because if you find a trend line zone, let me draw some of these patterns so we're able to understand. This would be your regular trend line. Okay. So the second has to have a breakout. All right. Now, let's look at the third rule will be that you should not trade for point two, because there's no confirmation to point two. And that is because of this pattern. Okay. Point three is always where you trade from, not point two, because point two is a confirmation, and there could be a change of direction from point two. So you do not trade from point two. You always wait for a breakout. Okay. You always wait for a breakout. Even when you get to point three, you always wait for a breakout from this point, and then you take an entry from here, not from here, based on the reaction here, because anything could happen. Now let me show you another pattern again. We have this one. Now there's no, let's say there's no 100% guarantee on any strategy. Regardless, I have a breakdown of Wyckoff, SNR, Elliott Wave on my YouTube platform, and what I can tell you is that these are all technical methods. And then if it's technical, it's just technical. There's no confirmation to say this strategy is 100%. You just, as you get good at it over time, you continue to improve. So this is also a trend line confluence on Malaysian SNR, because you have this as a resistance. It got broken, and the price heads back up, you following this trend line confirmation and this resistance level from here. So this is also kind of like an advanced pattern. We also have another one like this. This is the Quasimodo confluence. Or you have it like this. Let's put it this way. Okay. And this is the last one. I would show you guys for today, which is the Quasimodo Confluence, which is price reacting from the first resistance level, and then the second becomes the Quasimodo head. You could also use a confluence from this point like this. Like I said earlier, the more trend line that confirms your area of interest, the more confluence you have. It's not like, the moment it is. And this is just your entry point here because of the breakout. So remember, this is point 2, 1, 2, 1, 2, breakout, point 3. So this is your entry point. And on the next episode, I'll show you guys a more practical perspective. This is just a basic intro into trend line chart and Malaysian SNR all Confluence together, as you can see. This is basically the conclusion of the episodes of the mentorship. From here on, we're just going to be doing analysis, and I'm going to be giving you guys these examples on the chart. So no longer technical issues or technical methods like this or models like this. Is going to be practical analysis and a breakdown of price actions from week to week. So thank you for this episode, and I'll see you on the next episode. Bye bye.